Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. So I want to go over both the opening and closing trades for today. Today we actually fairly busy in getting some opening orders into the market and filled, and then also closed out a nice little profitable trade in XLU. So to begin, I want to go over the BBRY trade, and we traded a credit spread in BBRY. And we traded the April contracts. You know, we've all been kind of focusing here the last week or so on April contracts, just moving more of our portfolio out to the next contract month. But in this case, we sold the 9-7 put spread in BBRY, and we took in a credit of 39 cents. Now, usually when you see me do a credit spread, I usually sell them for about $1 wide. But because the option volume was actually pretty good today at the 7 strike and at the 9 strike, it was actually a better idea to actually just widen out the strikes a little bit and take in a little bit more credit. And that allowed me to then sell less contracts, which just helps reduce my commission cost a little bit. So rather than selling 6 of the 9-8 put credit spreads, I just sold 3 of the 9-7 put credit spreads. And again, that widened out my strikes. I take in more credit, and I can sell less contracts, which reduces my commission. So a little bit of a good strategy there to reduce your commissions. Now, in this case, we took in about 20 cents in credit for every strike that we sold. It was actually okay because BBRY, the implied volatility here on BlackBerry, has actually been fairly high, and today was up at the 57th percentile. So definitely checks that box in criteria for being above the 50th percentile. And you'll notice that since we sold the 9-7 and we took in about 40 cents in premium, that takes our break-even point to about 860 on the chart. So the line that I've drawn here on the chart, that's about where our break-even point is. So we've given ourselves actually a pretty good cushion. And I'd like to say that namely the biggest area of support that we're going to have going forward is this area right around $9. You see that the stock had hit its head against that area a couple times, and then numerous times before in the past, it's bounced off of this $9 area before going forward. So I think that right now it's just a good play to the upside. We don't want to get in front of this thing. And even more so than that, we actually just need the positive delta in our portfolio. We're still actually fairly tilted towards the bear side, which is okay. I'm comfortable with that given how high the market is, and it seems to be continuing to get a little bit stallier and stallier each day. I don't even know if stallier is a word, but it's just seeming like it's running out of steam, and at some point it's going to happen that it's going to just turn over a little bit, have a little bit more cyclicality. But we do need some positive delta in our portfolio for April, and this is one way to get it. All right, so we go to the next trade today, and that is Chipotle, another one of these positive delta trades that we want to add to the portfolio. Chipotle actually was a fairly good trade today. I didn't think that implied volatility would be this high kind of after earnings, but that's actually the case. We sold the 550, 545 credit put spread. Took in a nice big credit of $1.50 per contract. Now this actually went out in 2 separate alerts, so I was getting a lot of emails about this. Sent out an alert for one of the contracts that got filled, and the reason I did that is because I didn't think that we were going to get filled on the second contract until later in the day. So I wanted to send that first alert out right away. It just went out right with the trade. And we actually kind of legged into this trade really by entering one contract and then entered another contract later on just to add to our position. Same pricing on both. We still got $1.50 on both. So that was a really good trade for us to get the 550, 545s in Chipotle. So we actually go to the chart of Chipotle, and you'll see exactly where our strikes are positioned. Chipotle had a big move up the other day. And so right now we are at the 550, 545s, which is right down here. So we're kind of below the recent lows that Chipotle's had, and definitely at the same level that it's been trading sideways at after earnings back in January. So again, feel pretty confident in this trade. We've given ourselves a margin of error that Chipotle could even run all the way down here to 550, and we still have room to go in our strike prices. But at least we're trading the right side of volatility. Implied volatility is above that magic 51st percentile. And again, we need some of that positive delta in our portfolio to help even things out. All right, the last trade that we went into today is Netflix. This was just a pure debit call spread, and we traded the 450, 455 call spread. paid a little bit over mid price. Usually when we buy a debit spread, we like to pay half the width of the strikes. So in this case, the width of the strikes here is $5. We like to pay half of that amount, and we just paid a couple pennies over that. So not too bad. What I usually don't like to see is that price going up to 270, 280. That's a little bit less or a little bit more than what we actually want to do. So anywhere around 250 is a good entry point for this. With Netflix, all we're doing is adding more positive delta to the portfolio, which we really need right now. Even though Netflix continues higher, this seems like one of those ones that you'd want to kind of get in front of this and take advantage of a bear side trade and possibly see a move lower. And we might even see that, and that's okay. And, this is one of those trades that really we just want to add some positive delta to our portfolio. Implied volatility is super, super low in Netflix. So the positive implied volatility factor that we have here is that we actually could see a nice little profit even if Netflix trades sideways and implied volatility goes higher. So by trading this thing right now when implied volatility is super, super low, we actually give ourselves another opportunity to make some money in this thing if implied volatility just jumps and Netflix stays almost where it is right now. So that's why we got into that Netflix trade. Pretty easy trade, pretty simple, straightforward trade going forward. All right, the last one that we want to talk about tonight is the closing trade alert, and this is on XLU. So XLU is one that we've had for a little bit now. We had actually bought a debit put spread in XLU. We bought the 42.40 in March, and so we got out of that trade. It's a little bit early to get out of that trade, but if you look at the width of the strikes, you'll notice that the max potential gain we have on this trade is $2. Now we paid about $1.40 for this. So we actually paid a pretty hefty premium to get into this and only left about $60 worth of potential profit in this trade. Now because of that and because it was actually a debit spread, we actually were trading this kind of really not with odds heavily tilted in our favor. So there wasn't too much room for profit. So we had a nice $24 profit per spread today and sold back to the market for those spreads. So we made just about $100 on this trade. It was actually a pretty small trade for our portfolio, but a really good profitable trade. You take a look at XLU and where it's been trading, and you can see that where we entered this trade and where it's trading now, we got almost the move that we wanted. We'd like to see it move down a little bit more, but hey, at this point we'll take it. We traded this thing after a huge run up and kind of almost picked the top exactly. So really can't get any better than that. It was just a really lucky trade, and that's what we want to see. We want to see those one-off trades that turn into winners. Take the profit off the table. Don't get greedy. Don't try to squeeze out another 20, 30 cents out of this trade. You just might end up seeing XLU continue higher from here and just wipe out your gains that you have right now. So at this point, we feel confident. Let's take trades off that are winners as this market continues to rally, and then add new positions on and new fresh blood, as you will, into the portfolio so that we can take advantage of different moves in the market. Right now, just so you guys know, the people who've been following us for a long time now know that we're actually still tilted a little bit heavy to the bearish side, and I've said this a couple times before in not only today's video but videos before. And you'll just notice on the S&P that we just have numerous days of continued highs, and this is really uncharacteristic for the market to do this many high days consecutively. It's not that the market can't move this high. It's that the market can't move this high on a consecutive basis day after day without some sort of profit taking. So I think at least the first level of support that's got to be tested before it goes higher is around 1850. That's where we've stalled numerous times. We've talked about it numerous times on this video and these tutorials that we do here on OptionAlpha.com. And the market has to come back down here and at least test and verify this level if it wants to continue higher. I don't think that we're going to see too much higher pricing before we actually come back down and test these levels. So that will give us a great opportunity to start taking off some trades if we get some good moves lower before March expiration. That's the plan, but we'll continue to add some positive delta to our portfolio and prepare for possibly another run higher towards the 1900 level on the S&P. If that happens, we'll have some opportunities to take profits on the trades that we've already made, not only today, but in the previous weeks. So as always, I hope you guys enjoy these videos. If you're watching this video on YouTube, you have to understand that you're actually getting this video publicly about 7 to 10 days after these trading alerts go out to just our members. So if you're interested in getting trading alerts, checking out this video live, you got to sign up for our free trial at optionalpha.com. You get a 7-day pass, everything we've got, no holds bars, no credit card information, nothing. You get everything that we have here absolutely free for 7 days. And if you want to continue after that, we'd be delighted to have you. So again, any questions or comments you have about this video, ask them below this video. I'll get back to it tonight and tomorrow before the market open, and happy trading.